With that, I want to move forward with our panelists. We also have bios on each of the panelists. We are very honored today to have a very strong group of panelists, starting with Scott DiGregorio, Jennifer DeRoyers, Ned Hale, Blake Chapman, Annette Haber, and Julie Gorman. With that, the last request I'm going to make to you is if we could save all questions for the end of the session. Just jot down your notes. I promise you that we will save time at the end of the session for all questions to be answered. And also at the end, our head of professional development, Angela Foster, will give you some details on some upcoming training that will probably continue with what we've covered today, and also some great new training that we're being offering in the coming months and into next year as well. With that said, we're going to start out with contract contingencies. Annette and Ed, if you can please talk to us about the new escalation addendum, we greatly appreciate it.
Okay, folks, I'm Ned Hale, and you see in front of you in your packet, this is a brand spanking new escalation addendum. Do you have that? It's a Florida Realtors form, so you can use that on a FAR/BAR contract, which is what most of us use. And, you know, this is an interesting form. I have seen, this just came out late July. Now, it's an interesting form. I have seen some brokerages with their own forms. And I did not share with you today some of the forms I've seen from brokerages because those aren't readily available. This is available on Form Simplicity, and you will see that it's more complicated than it looks. And let's just, you know, if you've taken a class with me, you know I could go on for the next 4 hours, but you wouldn't appreciate that, and neither would my fellow panelists. So I just want to we're just going to take a few minutes to go over it. You need to review it. If you have further questions, talk to your broker. But you see, it's important to note, especially on this, if you look at it, page 1, which is, I have 4 pages in this packet. Buyer capitalized mean that's the buyer on your current deal, right? Pay attention to buyer capitalized. It's a defined term on the second line versus buyer with a small b. The buyer with a small b is the competing buyer, right? So in other words, a buyer who really wants the deal is going to include this addendum, their buyer with a B. You put the name of the property on there, you check which property you want, and then it goes on, which contract you have rather, then it goes on to say, buyer agrees to increase the purchase price if there's a bona fide, unexpired, not beyond the time for acceptance from a competing buyer, small b. That's another buyer, not me, right? Small b. And you see that down there, received and acceptable to seller, we're defining that as a competing offer. The increase shall be calculated as follows. Buyer agrees that the purchase price shall be increased by blank, the escalation amount. That's ordinarily going to be what? Between $1,000 and $5,000. You know, in other words, I'll pay $5,000 over. I'll pay $1,000 over your best deal over the purchase price set forth in the competing offer. That's the offer from the other buyer. Up to, and then you put your maximum purchase price in there. And then if the increased purchase price exceeds the maximum purchase price, then the buyer's offer shall be the maximum purchase price, and the escalation amount shall be reduced accordingly. In other words, you're not paying more than the maximum purchase price, period. You put your ceiling on there. Now, a client once said to me when I told him about my billing practices, he said, well, Ned, there's an old saying, the balloon tends to expand to fill the room. And I thought about that and I said, you know, that's kind of an interesting point. In other words, once you're setting your maximum price, I think that idea is really going to get in the seller's brain, that that's what you'll pay, and they're probably going to find a way to get you to that maximum price. They may or may not. The cynic in me just said that. So in other words, you check one. How are you going to pay for the additional price? Are you going to pay cash? Usually you're going to check that box. Or you're going to get your lender to finance it. That's going to be a tougher thing, folks. Remember, on a loan deal, there's 3 parties to the contract. The buyer, the seller, and de facto the lender, right? I mean, they don't sign the contract, but in the real world, that's kind of it. Anyway, then you seek financing. If neither box is checked, then you're going to pay cash. And then it says here, seller agrees the revised purchase price. This is how you calculated it. Competing offer price, which is whatever, plus the escalation amount, which could be up, what, $1,000? Not to exceed of what, whatever that is. In other words, the seller's filling that out. It says here the seller fills this out. Seller to complete this section. In other words, they're saying this is your new price, folks. But what's interesting, it says here, you have to provide a copy of the competing offer with the buyer's identification redacted. What's to stop a seller from basically producing a fake competing offer? Yeah, some people do garbage like that. And it says bona fide, how do you prove that? You know, you're really asking for some problems here, I think, if you're using this form here. And get this too, it also says, at any time prior to seller accepting or counters buyer's offer in writing. In other words, neither, in order for a seller to exercise this, neither the buyer, capital B's offer can be expired, you know that expiration date of an offer, nor can the competing offer be expired. And that's not so easy to happen, is it? With everything going so fast. This form really, if you read it, is only good if neither the original offer is unexpired, nor is the competing offer unexpired. That is not going to happen in a huge number of cases, but it might. And then it says, if you don't timely furnish a copy of this other offer, then the price shall be increased by an applicable amount. And then I'm always concerned, and I know there's too many lawyers involved in a form. Look at page 2. All of these disclaimers. Now, Florida Realtor lawyers had to have been involved in this part. Voluntary, okay, you know, was it really worth it, and all this business. Basically stuff like, you know, fine print. So I guess what I'm trying to say is, I guess the idea is not terrible, but I think it's going to be tough for you to use this addendum in many cases because of the whole business of both the competing offer and the original offer have to be unexpired. I don't know, you do what you want, and I'm sure we're going to have a lively discussion here on this. I don't know if I'd use that or I'd do the traditional thing of, folks, we have a multiple bid situation. Please submit your highest and best. And don't forget about terms. Everything is price or terms. And we'll get to that a little bit later. I'm not going to take all the time. So I just want to say, you make up your own mind. I think it's simpler and easier to do the traditional, don't sign anything, resubmit your highest and best. Price and term offered by X date. That's my take on that. I do want to, at some point, I'll stop talking now, go over page 3 and 4 on the FAR bar. But those are my comments on the escalation addendum. I think it has limited use.
Annette?
I have a question for you, Ned, because I know you teach the distinctions between NABAR and FAR, so you notice that's not included here on the
Right, I
page.
see that.
So how would they address that?
Well, I think you can still use it for a NABAR. You would just have to add.
Add a little box?
You'd add a little box for NABAR.
Right. And then also, should we discuss on page 4 in the back line, 653 and 655, those additional words that are added?
Where?
Page 4. 653 through 655.
Well, I was going to go over that later.
We should do it.
You want to do it now?
Yeah.
Fine with me.
We're going to get on another topic.
Okay, fine. So here's the thing, folks. I'm seeing a lot of what I call bogus cash offers. Let's just call it what it is. You know cash speaks more loudly than loan deals, okay? You know that. Everything is price or terms. And I'm seeing a whole lot of this. People who never had any intention ever whatsoever of paying cash, checking the cash box, page 3, line 84, and then it goes on to say, buyer will pay cash for the purchase of this property at closing. Okay, there is no financing contingency. This is from the FAR bar. To close, okay. And then it goes on to almost contradict itself, line 85. If buyer obtains a loan to purchase any part of the property, wait a minute. It said they were paying cash. So what I'm seeing is this. Buyers know cash speaks loudly. They're checking that box, even though they're not intending to ever pay cash. They don't have the cash, or they don't want to pay the cash. They're basically masquerading as a cash deal. Okay, fine, it's not contingent upon it, so if they don't get the loan, they could lose their deposit. But you know what, we all know the world's not that simple, is it? I've seen deals be extended because the buyer needed more time and the seller needed to get the heck out of there. So here's what I tell everybody. If you are serious, if you're a listing agent, I've seen experienced agents recently. I've seen, over the years, When people have checked that box, I've seen sellers livid at their agents, including experienced agents, for falling for the bogus cash offer. So the way to avoid that is, number one, demand proof of funds, real proof of funds, liquid funds in a bank account, not a brokerage account, not an IRA, not a 401k, liquid funds up front even before you accept the offer. Number one. Number two, I recommend the following verbiage in the additional terms, line 653, page 4. I say, this is a cash deal. Buyer shall not obtain a loan for any part of the purchase price. Line 85, starting with the words, if buyer, that's the aforementioned, if buyer obtains a loan for any part of the purchase price. And all of lines 86, 87 are hereby deleted. This paragraph 20 will control over any conflict with any other part of the purchase of the contract. It's cash, no loans about it, and demand proof of funds. So that's verbiage I recommend, so you don't have an angry seller. I had a seller just the other day say, I am livid at my agent, my experienced agent. They didn't demand proof of funds. They allowed a non-cash offer to go. And in fact, I took less money for it because I thought it was cash. And they were angry at their agent. And that's inexcusable. That agent should have known better. So that's my take.
Okay. Scott, since you sound like you're going to be put on the firing line, when somebody puts a cash offer through and now they decide to finance, how do you approach that?
I don't want to be a lender right now. You know, it's hot seat. It's not going well. Look, there's a lot of finance buyers that are really in a tough spot right now, and everybody, cash and financing a lot. I think everybody's doing what they can to just get a house under contract. The fact that, 25 years of doing this, the fact that this document exists, it speaks to the insanity we're all living through now. So I have had buyers come to me and with cash contracts that wanted a loan. One option that's available for a lot of people, a lot of people don't know this, and I think a fair amount of lenders offer this. Fannie Mae has something called delayed financing, okay? And the way it works, if you're trying to pull cash out of equity, cash out of the equity in a home that you bought, you generally have at least a 6, in some cases a 12-month waiting period before you could access those funds. With delayed financing, there is no timeline at all. So you could pay cash for a property and then pull out up to 80% of the money right back. So you buy a $300,000 house cash, you take out $240 right back out. And I've done, these days, I'm doing a fair amount of these, I can actually start that loan application process before closing. I just need proof of closing, obviously the deal is closed before I close. But I've done situations where they close on a Monday cash, and Thursday they close on the delayed financing and get their money back. So I think that might be a loan program that helps bridge this gap a little bit without, hustling the contract's the wrong way to put it, because if you read, I'm not an attorney obviously, when I read that addendum, or that financing part, like you said, man, it is contradictory. What it says is they can get a loan, but if they run into a problem with the loan, it's on them. So I've had agents that have said, look, I am perfectly within the letter of the contract, and the seller has put up $25,000 and they're aware of the risk of it. And in some of those cases, they do have the money, and if push came to shove, they would write that check. But if they could borrow money at 3 and the market turning 9, why would they do that? So, so I don't have, as a lender, obviously, I don't have as strenuous of a feeling against the financing piece of it. But I do understand that. I think the last point you made, where a seller could be mad because they took less money because they thought it was that's a real thing. That's a real thing. So in an ideal world, the initial contract doesn't have, it's just more cut and dry and to the point instead of kind of speaking out of both sides of its mouth.
Welcome to the FAR bar contract.
Yes, there's lots of that.
Jennifer, as a broker, how do you handle situations like this?
So for me, the way that I like to do things, my outlook is always about protecting my customer. If I'm working with a buyer who's looking to make their offer competitive, ethics is my number one. So I think that I would have a really hard time fighting for my buyer if I knew that we were doing a bait and switch. So typically, I will not write an offer for cash unless I ask for proof of funds up front. And that's just a personal preference to me. I'm not interested in playing games. I want the people that want to buy a home, I'm going to help them 100%. But if they say cash, okay, great, show me your proof of funds, and then we put the offer together, and then I submit. That's the traditional way. To me, I think that's the appropriate way. I'm not interested in sharky real estate. But having said that, I have had a lot of buyers who have sold their homes, and they have that money, but they don't want to be house poor. And I'm actually making notes in my work binder as Scott's talking, because I'm like, ooh, this might be a thing. That, you know, there's a lot of people that I've had that have held out, missed opportunities for homes that they really wanted because they had the cash, but they were too anxious to spend it. And so I think discussing things like delayed financing is probably a really good plan. Talking about the escalation addendum, I would just say, you know, if you go to Florida Realtors, which I did last night to prepare, they have instructions. So as overwhelming and new as something like this is, you would definitely serve yourself well to go through and really look at this. And at the end of the day, just make sure you're asking yourself, you know, is this ethical? This to me kind of encourages my buyer to pay more than the home is actually worth. And is that what we're supposed to do? If you go back to what we owe our customers, I think if you're planning on using this, you have an aggressive buyer that just wants it, be very clear with them, run comps, be candid, so that later, when they are furious with you, when the market stabilizes, not drops, not creating fear, but at some point it's not going to be insane. It's going to be normalized, and then we're going to have a lot of really upset buyers because we said, fill out this form and you'll get the house. And is that responsible of us? So it has to all come back to protecting our customers and being candid with them.
And to continue on, and Jennifer, I want to stay with you on this one. Some agents opt not to use these additional addenda, and they use additional comments within the FAR contract. How do you coach your team so that they are very particular about the verbiage that they use within the FAR contract?
I suggest I have and train my agents to be as simple and to the point as possible. I know my purchase contracts, we're all supposed to, you know, don't just dumb it down. Know each term, you know that when you're working with a buyer. And so I encourage my agents to be very clear about what the contracts say so that we're not creating a mess in the additional comments. A lot of the things that I see people try to put in there are already in the contract. So I would say only add what you absolutely have to. So for example, if it's a cash deal, clarify that it is cash and no more. I mean, they're really, at the end of the day, there's almost never a need for an awful lot in the additional comments. But I do suggest that they use the contract over the escalation. I prefer to rewrite 1,000,000 contracts and negotiate clearly without committing my people to spending too much with an addendum.
Ned and Annette, do you encounter any of those types of issues where agents have opted to use additional comments rather than having the addenda to contract, and it creates issues for you down the road?
We coming back tomorrow? You want to second that, Ned?
You can only say it better than me. And I know you and I agree on this one.
You know, you have the unlicensed practice of law. You try to tell them just exactly as Jennifer said, keep it simple and try to stay away from it. I love Ned's terms. There's 16 lines of potential to get yourselves in trouble, coupled with the paragraph in the FAR that says anything that's handwritten, typewritten, or added prevails over a form and the form printing. So you have to really ask yourself and talk with your brokers, those of you that are not brokers, to see what do they deem is acceptable to be written in. And just like Jennifer said, keep it simple, and there's very few things that you need to actually add in additional terms.
What about Annette? An agent doesn't write a bunch of stuff in there, but the other agent writes a bunch of stuff. What about that? What do you do then? Call your malpractice carrier?
Well, aside from, everybody, of course, would need to initial and date anything that they would accept and make sure you've got a fully executed contract. But I think that if you're gonna define, write a lot of stuff, I mean, I always say, I don't want 4,000 characters on 2.5 lines for a legal description. I wanna see a blank addendum. So if we need to get to the point where we've got a blank addendum that we've gotta fill out multiple sentences or paragraphs, I think maybe it's time to get the party to an attorney to properly articulate what the intentions are.
I guess what I'm trying to say is, you write stuff down that can get you in trouble. If you accept stuff the other agent wrote in, you can get in just as much trouble. So it's not just what you write, it's what you let your client sign what the other agent wrote.
Julie, since you handle professional standards, are there any sections of the Code of Ethics where people should go to? I'm not asking you to cite chapter and verse, but where should they go to so they can best prepare themselves and understand what they should and should not be doing?
All of the Code of Ethics. Everybody should be aware, and we have it on our website. Everything from the preamble all the way to the very end. Everything that makes mention of what's in your contract, makes mention of how you deal with your client, makes mention of how you deal with the other realtor involved.
Thank you. Scott, from a loan perspective, with that additional comment section, or if they do not use the appropriate addendum to contract, does that create pitfalls in the loan process?
You know, it's interesting now. As a lender, my entire mission is to get my team and my system set up in a way to close loans almost as quickly as cash. It's not like you guys. It's hard enough getting a finance offer accepted. Getting a finance offer accepted with a 45-day close is insanity. It's just not going to happen. So everything I'm about now is trying to get loans closed in the 21-day period or as close to that as possible. So those are the types of things that slow us down. You know, contracts, the math being wrong on the front page of the contracts, addendas missing on FHA and VA, contradictory things being written into the additional comments, all of those things slow us down. And you know, I've had situations where there were mistakes on a contract, and by the time I went back to the listing agent and the seller, ultimately, the seller started rethinking the fact that they have a financed offer. You know, I wouldn't have to deal with this if it was cash. So a critical thing, and everybody seems to be very lawsuit happy these days. I think a critical thing is, as much as possible, with a target of 100% perfection, we need to make sure every I is dotted and T is crossed on day one, so we can move towards a very, very quick closing, as quick as the appraisals will allow. And that's funny. And the addendums, I would say probably a third to a half of the contracts I get are missing some level of addendums.
We're also in a world now of electronic signature, electronic initials. Jennifer, how are you working with your team to ensure that the buyer and/or seller are aware of what's contained within that contract rather than just electronically signing and relying on their agents to have their best interests at heart?
So first of all, I have a template set up for my brokerage so that I personally set each section that needs to be initialed and signed, which is easy because it's a fail-safe, mostly a fail-safe. The other thing though is that I always recommend and made it office policy that my agents have to review the purchase contract. And I know it's old-fashioned, but I like them to bring a copy so that they can go through it clearly in front of their buyers together. Meet for coffee, keep it casual so it's not intimidating, but that way there are absolutely no questions. You're not having someone click, 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 click and done, and they have no idea what they signed, and you just tell them, don't worry about it, it's just a standard contract, we're good here. But is that really gonna help them when they're anxious, they're freaking out, they're spending hundreds of thousands of dollars on your word that it's probably okay. So I think sitting down and doing that face-to-face review, when at all possible, or in these weird times, I've done Zoom reviews where I share screen. If it has to be electronic, and I go piece by piece and explain what they're committing to and ask if they have questions. At the end of the day, it avoids a lot of mistakes that you might catch in the process, and it also makes for a really comfortable, confident customer where going forward, you don't have to put out fires because from day one, they know you know what you're doing for them.
Thank you. Ned and Annette, you both kind of alluded earlier to FAR versus NABOR versus other contracts, and as we see, we're getting agents from across the state of Florida doing transactions on this coast. What is your best advice for agents so that we do not fall into that trap of a FAR contract tied in with a NABOR addendum and contradictory terms? We know that washer dryer seems to be one of the big sticking points right now with the NABOR contract and our contract. What other things have you encountered? And recognizing, please, and I'm going to kind of do a sales pitch for the two of them, they both offer phenomenal contract classes, and I strongly recommend agents and brokers taking advantage of their courses. And as Annette will probably state, and she's told me on multiple occasions, no two classes are the same. And they both do a phenomenal job. Annette?
I want to toss this over to Ned because he does teach the distinctions between the two, between the NABOR and FAR. And I want
Yeah,
to...
that's fine. I mean, my main thing is, first of all, try to use the form that you're most comfortable with, that you speak the language of. And for most of us, that's the FAR as is around here. Go down to Naples, and those folks down there use the NABOR, mostly as is, a different contract put out by Naples. Keep in mind that as long as your seller consents in writing and put it in the listing agreement, you can put in the additional terms in the MLS, FAR as is contracts only. You can do that as long as your seller requests that. And your seller's only going to request that if you ask them to. The problem comes is, what if you're in Naples or you have you want to make an offer on what? A contract a deal where someone says NABOR as is contracts only. You need to really understand there's some critical differences. I got burned on that when I first moved to town. On the NABOR form, for example, the buyer picks the closing agent on all deals. But if the property's in Lee, the seller pays. It's like, wait a minute, whoever pays should pick. Little stuff like that will burn you. All I can really say is, if you, and personal property section under the NABOR is way different than the personal property section under the FAR. All I can really say is educate yourself, take classes on the more commonly used contracts, and if you're making an offer, you need to get with someone who is familiar with that form, be that a broker, be that whoever, and consult with them, because you can really get burned. I'm horrifically embarrassed. I got burned on that business of who pays for title under the NABOR. I thought I was doing the title work because it's in Lee County and the seller's paying, and I didn't read the contract, obviously. What lawyer doesn't read the contract? I didn't. I have since. I learned the hard way. I didn't read the contract, and I thought I was doing the title work, but I wasn't, because the buyer got to pick the title agent. So you can get burned on silly little stuff if you're not familiar with the form. And again, you can't control the form if it's not your listing. You can if it is yours.
I want to know your opinion, Ned, on the NABOR FERPTA rider, that we don't have a FAR 1.14 under the comprehensive riders.
Yeah.
So have you seen that? They're gonna pull the FERPTA rider from the NABOR forms and try to attach it to the FAR form.
Yeah, and it doesn't all
It doesn't
correspond.
No.
But there is stuff on FERPTA, Foreign Investment and Real Property Tax Act, the federal law. There is stuff on FERPTA in the FAR contract. Yeah.
There is, but the agents are pulling that for a specific purpose.
Yeah.
So do you agree, would you recommend that they utilize that rider from NABOR with, no?
You have to be really careful about mixing and matching addenda. And you've been teaching the addenda class lately.
Yes.
Where, mixing and matching addenda from, for example, they even contemplate on this escalation addendum, you can use it on a FAR bar. Okay, that's fine. But some Florida Realtors addenda aren't appropriate to use on a FAR bar.
I agree.
You need to be really careful about mixing and matching addenda. And it's dizzying, isn't it? There's a whole line of FAR bar addenda. And then there's a whole line of Florida Realtors addenda. And then there's a whole line of NABOR addenda. And then there's a whole line of addenda from whatever out of area association that you may be getting an offer on. So it's any number of addenda you could be dealing with. And I mean, some of you have to feel like, wait a minute, I'm a realtor, not a lawyer. This is ridiculous. And some of you have to be feeling that way.
There's two things I want to add. At the back of the FAR bar, as is or standard, under the last comprehensive rider, which is double C, there's what word with a box to check? Other. So I would recommend checking other and adding this escalation rider.
You can.
So that everyone's aware that this is attached to the contract, okay? Because they're not yet, as far as I know, including it in the comprehensive riders for the FAR contract.
For the FAR bar.
Right. that's-
Because this is a FAR addenda.
Right. The other thing, Ned, is how would you feel if the agents are in a situation, just attach the subject to buyer's attorney review or subject to seller's attorney review, so that way the agents and the parties can work out the terms, but if they're still not sure, I don't see any reason to not include that.
Yes.
That way the agents, you have a deal, but just to have one more official review over.
Yeah, and there's an addendum for that.
Right.
And it gives it a time period by which your attorney can review it. And you don't have to hire an attorney in the meantime, but there are addenda. Buyer attorney review, seller attorney review. And folks, there's a lot more lawyers in this town, real estate lawyers, than there used to be. So you got lots of choices, I promise you. You've got choices of those that will help you, and you've got choices of those that will sue you. Because a lot of them are looking to sue people just like you and your clients. Are you seeing that? Because I am. You said that, Scott. I'm seeing so many litigation-oriented attorneys in this town that were never here before. Looking to sue folks like you.
And what do I say? If the parties cannot agree, then ultimately, when it has to go to litigation, who wins?
My girls, I gotta send them to college.
I think as we can all see, we could probably spend the entire hour and a half just talking about the contracts. Again, sales pitch, if you have not already attended the contract series, I strongly recommend that you do. If you're brokers, I strongly recommend that you approach the agents in your office to attend the contract series. We cannot all stay on top of all the changes, and they continually change, as Ned pointed out, even with the new escalation addendum, to stay on top of all the ins and outs of everything that's coming down from Florida Realtors, NAR, and the like. I'd anticipated having somebody handling inspections. Jennifer, just very briefly, a couple of questions for you. How are you educating buyers on focusing on necessary items on the inspection report versus the nitpicky type of inspection report?
That's a good question that we probably all could answer, right? I mean, what I do is I make it clear right up front that the inspection is for their best interest. They did agree to buy a property as is with the right to inspect, and I make that clear that especially people coming from other places where purchase contracts are almost never as is, and most of the time sellers really are obligated to make the house almost perfect before selling. So when people come down here and they see as is, a lot of my customers kind of glaze over it, like, maybe not really. And it's true, and I tell them, I will ask for whatever you like. Having said that, your terms are gonna be what strengthens your offer. So going through the inspection period, a seller who's already thinking he made a mistake can use those requests to say, I'm not doing it, and try to make you cancel. So what I do is we review what is most material to the home, what could impede financing, what I feel, we can reasonably present to the seller and say, this could cause a hang up not only for us, but for future buyers should you refuse to do it. It's something you'll have to disclose if you don't do it. And then if I can't articulate in some way that it's so important that it would need to be disclosed, then what I do is help them gather estimates, or have a handyman that I can call and get a rough estimate and then say, I don't want you to be uncomfortable. This is your opportunity to walk away if what's remaining is more than you want to take on. So make it clear, like, you're going to have to live with this. Do you feel good about that? Let's gather some cost and see what that's going to look like for you. But I really try to limit it to if they can't, if it's not a material defect, if it's something they won't have to disclose to the next buyer, they have no reason to help us right now.
Thank you. Blake, as you handle insurance, what things should we be requiring inspectors to look at? We know the standard 4-point, the standard wind mid, but what other things should we have inspectors taking a look at?
Yeah, absolutely. Thanks for putting me in between two attorneys. I appreciate it. Absolutely. At least they agree on a lot.
Just right now.
Yeah, just right now. I would say the best advice that I can give you is those 4 points, and you've heard that term before, but the roof, the plumbing, electrical, and AC, more important than ever before. And just, the minor maintenance items, not so much, but the major things. Does the roof got a remaining useful life? Is the AC 1987? Has it been updated? And plumbing system, those plumbing systems that to be aware of. Polybutylene's a big one. Old water heaters that are rusty. So I would say those are the 4 things that I would probably really hone in on. Not so much that we don't care about the nitpicky stuff either. Whatnot, your baseboard roofs, those types of things from the insurance side.
And Scott, as a lender, I know some agents feel it incumbent upon themselves to submit the inspection report or put within the contract or an addendum to contract repairs to home. Is there an appropriate way for that to be done so that it remains legal but doesn't create issues on your end?
Yeah, so please don't ever send me or any other lender the home inspection. We are not allowed to unsee things, and the only thing we know about the condition of the home is what's on the appraisal report. I've had some appraisers be incredibly detail-oriented, and I've had other appraisers miss things that I'm surprised they missed. The challenge on the financing side is if a seller is giving money towards a buyer for repairs, it's considered a sales concession, and that amount is that the purchase price is reduced by that amount. So the only way for money to go from a seller towards a buyer is in the form of closing cost assistance. I got a contract.
Repeat that. I see this problem a lot.
I see it all the time. I just got a contract in, seller to give buyer $17,000 towards a new roof.
No.
Yeah, no.
Ain't gonna work.
No. You have to have those conversations. Now, in that particular case, closing costs weren't $17,000. So it got difficult, and it's closing today, and it's been a match. But once you go beyond that, it's problematic. If you write something into the contract, the appraiser is going to make the appraisal subject to the repair and work being done. And again, in an effort to try to close loans in 3 weeks, it's tough enough getting the appraisers out there quickly these days, right? Now we have to get them back out for reinspection after the work is done. And in normal markets, that's 2-3 days. In this market, it could be a week, and that week could be make or break for us. So, when renegotiations are happening after the home inspection, the lender should be looped into that conversation. I can't tell you how many times I've had the price changed. Nobody informed me. And I send the closing disclosure to my buyer, and they go, wait a minute, that's not the purchase price. That's ugly. They close, but they close ugly, and we live in a world now of social media reviews, and I think we all have to be very, very mindful that getting the deal closed ugly is not acceptable, because you could have people walk away extremely upset with you, and everybody has a platform these days.
And Blake, how about from your perspective, where you have that credit for a new roof, how does that play into getting insurance coverage?
I mean, how that all works out, I mean, the one thing from the insurance carriers, they just want the new roof. So however that kind of gets done, you know, sometimes we can get some exceptions, hey, it's going to be done in 30, 45 days. I would say underwriting is very tough right now, so getting those exceptions are fewer, but we usually can. But yeah, anything like that, typically it's just an underwriting quick review that we have. Hey, they're going to be updating the plumbing. I mean, a lot of the carriers they understand that, you know, anytime you call a plumber right now, it's like 2 or 3 weeks, depending on which one you call or anything of those nature. So I just say, give us the facts. And if you got a good agent working for you, they can take those to an underwriter and say, hey, this is what we got going on. And we can usually get approvals on some of that stuff for sure.
Can I ask a question, Blake?
Absolutely.
Blake,
Sure.
insurance has shot up in this past year.
Yeah.
What on God's green earth is going on? And are we going to face an insurance crisis?
Yeah. Wow.
What's going on?
We have all day. We have all day.
See?
Yeah.
We have tomorrow, Annette?
We have all day. There's a lot of things that are playing into the insurance rates right now and the underwriting. You know, I mean, we're in the middle of a carrier that is insolvent, is bankrupt, right? So August 27th, there's 45,000 policies that are being canceled in the state of Florida. 60 days ago, you know, there was 20,000 with that same carrier. So you add that in the last 90 days, we've had 65,000 policies put back on the market.
So did you just expand who that carrier is?
Yeah, so that carrier is actually Gulfstream Property and Casualty Insurance Company. So, you know, there's a firestorm on that right now. I mean, you know, of course, we're working around the clock on those things. Yeah, I mean, if some of the things don't get curbed, and what's the major thing is that who gets paid? You know, you guys already said who gets paid on a roof claim or something of that nature. Yeah, the roof claim's $17,000, but the attorney bill's $100. You know, so anyways, there's a lot of that stuff, huge, and
More claims, in other words. Claims are way up.
More claims is way up for more maintenance issues than anything else. So, hey, this is a 19-year-old shingle roof. Why don't carriers write 19-year-old shingle roofs? Because it's a claim waiting to happen. And so that's why, and it's never was meant to be, your home insurance was a sudden, or something like a hurricane, things of that nature, right? But not just because it wore itself out. You know, hey, that's good maintenance on your home. So I would say there's 4 points. I think those are the things that we should take care of as homeowners and not always rely on like our insurance company to take care of it, unless we have a fire, unless we have a hurricane, those types of things. So I would say that just the legal cost on a claim is probably what's driving the rates the most. You know, that's
Somebody's got to pay for those lawyer TV ads, don't they?
yeah, those are there. It's not so much the direct carriers. The costs of reinsurance are going up. You know, so all those costs get pushed onto larger, bigger insurance companies, and they say, hey, we've had enough. You know, and so those are a lot of times investment firms and things of that nature. And so, you know, when they calculated like some losses from Irma, I'll just give you one carrier, and they thought it would be 300 million, and it ends up being 900 million. They're like, hey, that's a big difference. You know, I mean, so some of those things factor into it as well. You know, I think it will work its way out. It's going to take some time. Rate, you know, I would say probably in Southwest Florida we were, you know, probably a little bit underrated. I think it's been a little bit more of a very reactive recently, where, I mean, some increases are 100%, you know, sometimes more. But yeah, so that's probably, and then the competition, you know, I mean, Citizens, the state-run insurance company, is growing by 5,000 policies a month. I mean, so you eliminate competition, and you make it, you know, that where a carrier can't sustain their losses. You know, I mean, yeah, it's gonna spiral down into just a bad property insurance market. And prior to that, so one of the largest condominium insurance writers went bankrupt. You know, all the condominiums have new roofs, things of that nature, and that was back in May. So, and then prior to that, last year, we had a carrier anchor insurance, which, so there's been several recently, or whatnot. I think there's still some capacity and some options with some of the carriers, but very limited, I would say, or tough underwriting. I mean, that's why I keyed in on those 4 points and making sure those things are updated. Those are probably to get you the best pricing, best carrier, best options, whatnot, because a lot of the carriers are diluting the policies, and that's the one thing I hate the most, and so when we see that, you don't want them to take out, carve out exclusions and endorsements is what we call them, that just, limit the coverage. So, anyways, I would say speak up a little bit. There needs to be more action, legislative action. There's a lot of, there's a lot of legislators, and this is my thinking on it, is that don't do anything because, there's, who knows, they're either an attorney or they know, large groups, and, but yeah, so it's got to get paid for somewhere, and, anyway, so that's a little rundown on it for sure, but yeah, it's unfortunate, absolutely.
Scott, another day.
Okay, one quick thing, and I don't want to take up too much time on this. Many lenders offer, going back to the issue of repairs that need to be done, many lenders offer repair escrows that can be set up at closing and give the buyers up to 30, sometimes 90 days to get the work done after closing. So if there's a problem with the property and the property does not meet standard lending guidelines, in 95% of cases, you can set up a repair escrow. It's not this big complicated thing. The appraiser goes out and does a reinspection, but this is a month after closing, so right, we don't have to worry about you guys, the sellers, and all of that. So just know that those repair escrows are an option. Loop the lender in, make sure they offer it, make sure the buyer's on track with it. The money for those repair escrows could either come from the buyer or the seller. There's obviously rehab loans, where the money comes from the loan proceeds, but the money can come from the buyer or the seller. It's a very simple process. I'm doing them more and more these days. So just keep that in your toolbox as well to help us navigate these waters during this market.
Thank you, Scott. Annette?
Do you have any comments on how credit factors into the insurance that you're able to provide for buyers?
Yeah, so a lot of carriers are doing insurance scoring. I think that's where you kind of go on that one. But they're looking at credit score. It's kind of like a soft hit, so that's can be a factor. Has there been any claims on the property? So that's a big thing. It wasn't their claim, but there was a claim on the property. A lot of carriers are looking at that. Is that a problematic property? But those things do factor in there. I would say a majority of carriers have gone that way. A lot of modeling shows that is less likely to file a claim, based on consumer score, things of that nature, as there been property claims on the property. So yeah, I mean, it's definitely, it's not as high as it would be on like an auto insurance rating, but almost all of them are doing these discovery reports. And from an agency standpoint, it's like that could be their home back north that they sold, and so we got to work through those things. I'd say our approach is a little bit different. When it comes to if something's needed to be done, instead of us kind of telling you, hey, no, we don't have an option, we try to tell you what needs to be done, and here's the option we have, so that you get a little bit of help that way for sure. Because, but yeah, credit scoring is definitely in there.
So keep that in mind, all of you, when you're writing offers. There's a rider that talks about homeowners insurance and flood insurance. And if you're talking to your buyer and you know that there might be some questionable things about their credit, just as Scott will probably chime in on, it's a good idea to include that rider. It's rider what? Anybody know?
Gee, who did the first house? Okay, now let's know.
Yeah? Okay, the second thing I wanted you to just talk on briefly is you mentioned the word reinsurance, and I'm not so sure that the people who are attending this event now or the people who are going to watch the replay of it understand what reinsurance means and how important that is.
Yeah, it's huge. So basically, a lot of the domestic carriers, or some of the ones that are in the Southwest region, they purchase for catastrophic events, which would be Hurricane Irma. So their day-to-day claims, their water claims, their fire claims, things of that nature, they usually pay more in-house on their capital, things of that nature. But their reinsurance is usually backed by large global insurance companies, and so they pay premiums to those carriers, and so their premiums are on the rise. Well, what happens to our premiums? Our premiums are on the rise as well. So that's really what backs the national, catastrophes and things of that nature, and so they weren't as prepared for it. And those usually come up in like 3-year increments. So it's not like, hey, here's your bill. It's not like ours, right? So they have it in like layers. I mean, multiple carriers actually. It's a very complicated process. I don't even know a ton about it other than what I'm telling you, but there could be 12 carriers on their reinsurance that will protect them up to like 4 major events in a year. So it's layered that way, just to kind of keep it simple, but those are the ones that back the national catastrophe claims like a hurricane or any large wind event or anything of that nature, but that's kind of what it is. The large insurance companies.
Are you concerned about the increase of rates due to the next hurricane, and it will hit?
Yeah.
And what about condominium buildings collapsing in Miami? Has that affected insurance rates?
I would say the collapse is too early to tell. But I would imagine for sure carriers are going to be looking at that in a big way, because that was abrupt and sudden, and whoa, wow, that's a lot of money, and a lot of lives too, right? I mean, everything else, fairly unfortunate. But so it's just too early to tell. I mean, that was just so recent, but I think it's going to really dramatically change that industry. That's my opinion.
And shoot prices up.
Shoot prices up, maybe be mandatory to do additional engineers and additional supports and maintenance. I think the maintenance piece is big. I think that's my big thing. Just don't always. Claims they're not fun. I mean, they're really not. You need them for when that sudden accidental thing happens, but I would say try to take care of the maintenance issues. And I think that's the same thing from these buildings is the maintenance issues they need to really put into place early and get those things done, whatnot. Some of the hiring condos, if you get it, just down in Marco, I mean, those things are just like spot on immaculate because they put the money into them every year. Their dues are high, but they're very, anyways, they're taking care of those maintenance issues so they don't have something like that. But I do think it will have an effect, for sure, absolutely.
Scott, question for you on the same subject. We're seeing that condominium insurance is significantly increasing. How does your underwriter go through that evaluation process to determine whether or not necessarily today, but when the insurance is up for renewal, that your borrower will actually be able to cover the increased association dues plus make whatever payments they need to make?
As far as post-closing?
Correct.
So that's actually not, and don't talk to anybody to make this a thing. That's actually not a thing right now at all. They don't look at thankfully, they don't look at future potential rate increases. One thing though that is happening now on the lending side of things in relation to insurance is insurance companies now are often no longer providing the replacement cost estimators. As the lender, all we care about is that you have replacement cost coverage. If God forbid the house burns to the ground or gets blown away, will you rebuild it back to its original condition? And from our standards, that's all we care. And each insurance company, each insurance provider, I should say, has their own RCE that they've always provided to us. And apparently there was a shift recently, and they stopped providing that one. Yeah. And I've had some issues. And by the way, Blake, thank you for not putting my personal insurance with any of the companies. Appreciate you, brother. Where we've had to get a little creative on side of things. There are guidelines that come down from Fannie Mae and Freddie Mac, what we call agency guidelines, and they just are. This is not something that you could negotiate through, it just is. And we need a replacement cost estimator or certain verbiage in the insurance policy stating that there's replacement cost coverage. And Blake, I'm sure that's something you're dealing with on a regular basis now, because it's caused some real grief on a couple of deals here and there.
Yeah, so July 1st was the date on that, but the replacement cost estimator, every carrier has their own. And, I'll just give my opinion, and every carrier has their own. And so it was one of those things, hey, we use this, hey, Scott, here you go, whatnot. Well, there was a lot of of push to, hey, these are proprietary to the carrier. And at the time of a claim, you can see where there would be maybe an issue or whatnot. Oh, we didn't have wood flooring, right? Or something like that. So they're proprietary to the carrier, so that they pay for these softwares and things of that nature. And they said these don't need to be discussed with anybody but us and our agents, basically, I guess is what it was. But yeah, there is something specific in a policy, Scott. The state really actually makes it really easy. It's called OIR form, Office of Insurance Regulation. And it's basically a dumbed down version of what does your policy cover. It's called checklist of coverage, and it's in every policy, it's in all of ours, and it will state on there, is it at replacement cost settlement basis, or is it on actual cash values loss settlement basis? And so typically, I haven't ever had a problem if that's provided. So it's not going to be on the declaration where it states replacement cost, but in the policy, there's requirements of an admitted carrier to have this checklist of coverage, which goes down through, and actually, it's beautiful. If you go, and it's got yeses and nos on, hey, is hurricane covered? Yes. Is theft covered? Yes. Is, accidental discharge of water, which is water claims, covered? Yes. And then there's flood cover, typically no, right? And so anyways, that's called a checklist of coverage. It's about 3 pages in your, probably towards the end of the policy. And most lenders are not having any problem with that because it states on their replacement cost stuff.
It does. I've had a couple insurance companies who were not as familiar as Blake push back and say that there's nothing they could provide. So I wanted him to say that so you guys know the checklist of coverage is a specific thing to ask for, and underwriters do accept that because we don't care what's format it's on. We just need something saying that they're going to rebuild the house if God forbid something happens. So just if you run into that, just know to ask for that checklist of coverage, and the underwriters accept it with no issue at all.
Thank you. Jennifer?
Well, just coming back to the question of future affordability, should insurance rise and HOA fees rise and things like that, I would kind of argue that that would be our job to go through during and prior to our offer process. Because I know there are realtors who they want to make the deal and move on, and they don't really work toward, long-term repeat customers, and that is a way to do business. It's not my way, and so what I would urge all of you to do to, feel better, sleep at night, and build those repeat customers, which is really our aim, is, dig in before, you're working with someone, they want to buy in a condo or in a townhome community. Ask for the budget, ask for if there's a reserve. Look at the history of the HOA payments and fees and see how often they rise and what percentage they rise at, and then be very candid with your buyer, particularly, if you're working with someone on a fixed income, if you're working with someone who is maybe, single with children and trying to do the best they can, that their budget is tight, make sure that they understand what they're getting into before the deal closes, because now that you know that it's not something that their lender is going to insure, you want to make sure that you're doing your job to protect them 100%, in my opinion.
And by the way, that comes up on the tax side of things too with the Save Our Homes Act. I sat down with a woman about a month ago who was facing foreclosure because she bought a house. I did not do the loan, obviously. Her taxes were literally $90 a month. I guess the seller had been there forever and had certain exemption, and jumped up to over $300 a month. And she could not afford that, and she was a single mom, and she was facing foreclosure, and she came to me desperate, and there was nothing I could tell her. In this market, the only option was to sell the property, and then she's like, so then I'm homeless. And the sad reality was probably. So, that information is readily available in LIPA, that is readily available on the tax collector's website. We have to do a better job, or do a good job, I should say, in making sure that they understand, hey, your payment's starting here, because, we know that, right? There's a tax estimator on the website. Hey, your payment's starting here, but next November, it's going to here. So, on top of the insurance and the HOA dues, absolutely have that conversation regarding the taxes.
But Scott, isn't that though touching upon another crisis that we're seeing right now in this crazy hot market? Lower income and lower middle class folks, and even some middle class folks, they're getting priced out.
100%.
Absolutely.
And it's gonna get worse, folks. It's crazy. I just can't help but make that comment.
Yeah.
Right? Who's not seeing that? I mean, it's really sad, and I don't know the solution.
I don't know that there is one, but I'm having conversations with people on a regular basis, and in my mind, you know, I've never been a pressure guy, right? Like, this is a huge decision, you do you. But there's some people I look at in the back of my mind, I'm like, they're in a world of trouble if they don't do something in 24 months. And by the way, rents are going up just as much,
Yes.
if not more,
Shooting.
than purchase prices. So it's long been cheaper to own than rent here in Lee County. That is exacerbated in this insane market. So it's not like, okay, if you don't buy now, you'll just rent. No, if you don't buy now, you're gonna have to move out of this area. And I think those tough conversations with some people are necessary and appropriate, but it's an issue. And like Ned said, it will get worse in the coming years.
And I want to thank Ned because he helped me segue to the next area that we need to talk about, which is how are we coaching and qualifying our buyers in this type of market where a low moderate income person may not necessarily be able to buy the home of their dreams right now, or where buyers are actually being forced to overpay for something that maybe less than 6 months ago was considerably less. Jennifer, I'm going to start with you, and then Scott, from a lending perspective, you can offer your.
All right, so I would say you just have to be very clear with your buyers. Educate, because a lot of them are already going to be doing the work for themselves. They're going to come to you and say, okay, here's this house, I want it, it's still active, I want you to write an offer $20,000 below list because on Zillow, a month ago, they had it listed, right? And then you have to kind of go, and so I'm a big fan of showing comps. I used to be a big fan of using comps to offer pricing and catch homes that were overpriced. Now I have listing agents, and I'm sure, you know, you said comps don't matter anymore when it comes to pricing because everything's insane. But what I do is show them that. I show my buyers, this is where we are. So here's your pre-qualification letter. I need you right off the bat to understand that it's going to be very hard to get them to move even an inch. The other thing that I do when I'm working with, you know, my son's Army, so I try to work with a lot of VA buyers. I work with a lot of first-time buyers. That's kind of my favorite thing to do. So that means a lot of FHA buyers. Yikes, right? And so and that the way that I have helped my people get into houses is working the terms. You have to know your contracts right now, especially if you're working with entry-level buyers or even older buyers who are trying to downsize. So I might be working with a finance deal, but I find a lender who can close it really quickly. And I make sure ahead of time that they're ready to order the appraisal on day one, and I'll put that, you know, in our offer, that appraisal will be ordered after getting confirmation from my lender. Make sure you're not just making things up. Be clear that you can deliver, but work the terms. Make sure you can do a fast inspection, but talk to your inspector contact first. Speak with your buyer about the things that need to happen before they write their offer. So you can say, okay, we're not really going to be able to go above list price. That's not what you're approved for. You don't have the cash in hand. So how can we win? And then make sure they know you have to be ready to pay for this up front. You have to be ready to order the appraisal up front. And, you know, from there, it's just between, you know, God. Like, you just have to know how to negotiate it. And aligned with that is the buyer love letter. And I saw that in one of our handouts that as far as helping your buyer stay competitive, and I know that's not technically qualifying, but I just want to touch on the fact that right now the national realtors are talking about how that can verge on the side of discrimination. So should we be encouraging our buyers to share that? I don't, because all that does is sway your sellers in an inappropriate way. And I just think stick to the facts, stick to the terms of your contract, and educate your buyers. Make sure you're having that discussion about pre-approval and the need to act quickly when you find the right home, like day one. Just go over everything. And I might also add, even though it's important to pre-qualify our buyers before showing, and I know sellers really want to know that they're pre-qualified before showing, don't be that person that says, oh, go get a pre-approval and then call me. Because I get a lot of your buyers who call me and say, oh my gosh, this realtor was so mean to me. I wanted to get a feel for what's out there. I have a great credit score. I'm ready to go. They wouldn't even talk to me without a pre-approval letter. I mean, we're all busy, and we all know that we don't want to waste time with the wrong buyer. But is anyone really the wrong buyer? If they're not pre-approvable, they will be. And if you treat them with dignity and offer them the 10 minutes it takes to have that conversation, you're gonna get their deal, whether it's now or later. So.
Scott?
Yeah, I'm actually sending people out shopping with mortgage loan commitments these days because this is insane. But, because every little thing we could do. But on your point, Paul, about, how are we helping people in the lower income brackets in this market? I'm finding myself doing a lot of budget advice for people nowadays. I sat down with an older veteran couple. I'm looking through their bank statements. I said, hey, what's your thing? They go on to tell me that every single day, 30 days a month, they go out and they have lunch. And I asked them where they go and everything, and I'm leading them there, right? And they said, oh, it's not expensive. And I said, I'm sure it's not. Where do you go? And Jason Staley and Bob Evans and, Mel's and that type of thing. And I do the math, and I said, you guys are spending $900 a month on lunch. And they said, we're not. I said, it's $30, you're averaging $30 a day, 30 days a month, $900 a month on. So what I find a lot of times with people is, and by the way, this is all income levels, right? I say this is people making $100,000 a month, and I say this is people making $30,000 a year. Their check comes in, they pay their bills, and the rest of the money just kind of vanishes, they don't know where. So what I'm doing with people, with lots and lots of people these days is, you're paying $1,300 a month in rent, your mortgage payment's gonna be $1,600 a month. Sometimes you can't afford it, and it's just math, but in many, many cases, well over 50% of the cases, I could bring awareness to where they're spending their money and really help them allocate the money into a better direction. And I think going, and that's not my job, but that piece of financial education, that piece of awareness, I think is a critical step in the process to help people understand that maybe they can't afford it, right? Is it a fear they have, or is it a mathematical reality? And those conversations, which can be difficult at times with people, my most appreciative and most loyal clients are the people that I've taken them through that, where they walk away not only as a homeowner, not only with good housing, but with better spending habits, better fiscal management. I mean, financial education doesn't exist in this country right now. It's insane. So as a lender, that's a huge passion point of mine, and I think that I think that that's a big step in the right direction to help bridge that gap.
Thank you. Jennifer, one of our last topics will be handling multiple offers and also choosing the best offer you got from the seller. How are you going about that process?
I would love to go on record and say that I absolutely hate multiple offers. I hate them. I can't wait for this to stop. I think, and we discussed this in our meeting this week, it is not our place to be choosing the best offer. Full stop. That's not our job. Do not do that. That's not okay. Our job is to present all of our offers to our sellers, and if they have questions, after we've explained each part of the offer, then we answer their questions and allow them to make the decision. And a broker that I worked for before I started my own company, one of the things she used to tell us was that, our opinions, like giving advice, that's a great way to get sued. It's not our job. We're not lawyers, and we shouldn't act like lawyers. And we can't get personally involved, and for goodness sake, it is not about trying to make the most money for ourselves. But there are people like that out there who are driving the conversation towards a deal that's going to close the fastest so they can get paid because they want to go do something. What I like to do is be very candid with my other agents, my co-brokes, when they're submitting offers, and I have several at once. I am not a highest and best person. I don't like to put that call out. I work the deals as they come in. But I'll be clear, if we have another offer on the table, remember that if they ask for proof of multiple offers, that is their right, and we can send redacted proof. So if you're working with a buyer and you get that comment, oh, well, is this the best they can do because, we've got another offer coming in? Great, I'll have that conversation with my buyer. Send me proof of that other offer so I know we're not being manipulated. And a lot of times you'll get pushback. That is something they are allowed to do and required to do. Or if you feel like they have multiple offers and the offer isn't being presented, you're able to contact their broker and have the broker give written confirmation that the offer was presented. And then you can kind of get into the weeds on that when you see in the listings, don't bring FHA, don't bring VA. Right. Because a lot of the times now, we've got lenders that those deals can close as quickly as any other deal. And, we can't just send a love letter and be like, oh, but, my buyer is in the Army, and so whatever, like, that should be pertinent. Of course, we believe deeply that is housing that is, well-deserved and whatever, but we're talking about numbers and math. And it's not emotional, and it can't be. So the best way to advocate for that is just, okay, you can't accept FHA or VA. Is that in the listing agreement? Is that in writing? We need to know, like Annette was saying that, it all comes down to what's in the listing agreement. So know that when you're advocating for your deals, that if it says no FHA, is there a problem that's not going to get approved by FHA, or is it because you haven't educated your seller about the way that FHA loans work? And the same goes for VA.
Scott, and I have a question for you relating to that as well.
I don't know if this is the right platform for this, but I can't tell you how many times I've had listing agents tell me, I just don't want to deal with the aggravation of a VA loan. These are our veterans, people. For the love of all things good in this world, these are our veterans. I'm doing a loan for a VA loan now on an $850,000 home. The guy's $3 million in the bank, perfect credit. He's a rock solid buyer. But he earned the right to buy a home with no money down and no mortgage insurance, and he's exercising a right that he has earned, and earned it way more than many of us have ever earned anything. So, if it is what it is if a seller's giving instructions, but I believe there's a lot of agents out there instructing their sellers this way, and I just feel it's morally wrong to do that.
Improperly or ignorantly?
Because it needs
100%
to be education to all of us realtors.
Yes.
That what we believe to be true perhaps isn't.
Yeah, I had an agent ask me about the FHA, the FHA inspection. I'm like, we haven't had an
We don't
FHA
have
inspection in like 18 years. I mean, literally, it's been that long. It's just not a thing. So, yeah, there needs to be education on that. I happen to teach an FHA VA class if you guys want to come hang out with me.
Yeah, and Annette actually reminded me of a good point that should be said, that
It's in your handouts, so you can follow.
Yes, it's on the last page, presentation of offers. So, and I'm sure we all heard this in our real estate class, that, theoretically, we have the right to be present when our offer is presented to the seller. Has anyone ever done that? I've never done that.
That was like 30 years ago.
So the buyer's agent is allowed to be present when the listing agent presents the offer. Yeah, and you can. And if you have doubts that your offer is actually being presented in a high volume offer situation, you are absolutely able to ask to be present. However, the seller can refuse. And so when the listing agent says, oh no, I'm sorry, the seller doesn't want that to happen, then, well, it needs to be in writing. The seller needs to be in writing. It's not the listing agent's job to override that right of ours as another way to protect our buyers. And then we are able to see the written request as well.
And that it was kind of alluded to before about tying in the listing agreement to the terms of any offers coming through. I know you teach listing contracts. Can you expand a little bit upon what's in that document so that everybody understands where the seller's authorizing and what they're authorizing?
Well, this goes back to what we discussed in our meeting last week. It's very basic. You meet, if you're a listing agent, you meet with the seller. You review the listing agreement, you discuss the terms that the seller wants included in the listing agreement, and then that listing agreement has the information that is then uploaded, for lack of a better word, into the actual MLS. And so all of the terms of that listing follow into the MLS listing, where the selling agents can actually review it. So there's no room for miscommunication or lack of transparency with regard to what's actually part of this listing. Is that what you're talking about, Paul?
Absolutely.
Okay, so it's very basic. What we talked about last week was that if it's not in that listing, or if it is in that listing, there's really no room for discussion about that. That listing agreement is a document signed between the seller and who? The listing agent's broker.
Yeah.
So I don't remember what brought that topic up, Paul, but when that was happening, I was a little confused because
But like I said in that meeting, folks, a common misunderstanding is you have to submit every offer to your seller. That is false. You do not. You must submit every offer to your seller that meets your seller's parameters.
and the parameters are where?
In the listing agreement. So if your purchase price, if your list price is $400 and your seller puts in the listing agreement, do not submit any offer to me under $350, it clearly says in the listing agreement, you can say to the agent that put in an offer at $325, my seller has instructed me not to submit that. That doesn't violate any rules, that doesn't violate any laws, that doesn't violate any article of the Code of Ethics. What would violate if the seller said, oh, that sounds like a name of somebody from Neptune. I don't want any Neptunians buying this building. That is against the law. But as long as you're not violating any laws with discrimination, if your seller says, do not submit any non-cash deals to me, then you don't have to submit it. It's that simple.
But make them write it down.
Make it in the listing agreement.
Write it down. Everything, like I wrote it verbatim in our meeting last week, that everything is reduced to the listing agreement.
Yes.
And so I've had plenty of sellers get angry after, before things blew up. They'd say, I'm tired of these lowball offers. I want nothing below this. Okay, well, I need you to sign that addendum that I sent over, or there's nothing I can do for you.
And I still have to submit it.
Yes,
Unless
exactly.
you tell me in writing not to submit these low balls, these non-cash, you have to submit it.
Right, like, I'm sorry, don't yell. This is my job. This right here, this box, I have to present all offers. So just make sure if you have someone who's very clear about that, write it down.
So
Protect
Jennifer,
yourself.
quickly, can you expound upon then what goes in the confidential comments in the MLS with regard to the seller's desires like that?
Well, to be completely candid, I have never had a seller go so far as to agree to put anything like that in writing. Because once you press them, in my experience at least, and I don't want to generalize, but I've had lots of grumpy sellers back before crazy times, and they'd say, I'm tired of this, I don't want to see offers below this, and I'll say, okay, and I understand your frustration, I'm going to bring you every offer unless you'd like to put that in writing. Well, I don't know if I really want to close the door. I mean, what if we can bring them up? And a good way to handle someone who wants to do that, because you and I, we all know that that's not in their best interests. Another broker I worked with said, present any offer, counter any offer. An offer is just, even a crappy one, is the beginning of a conversation. And if you're good at your job and you know how to negotiate, then you're going to be able to find that, middle ground where at the end of the day, it's not really even about winning. You've got someone that wants a house and you've got someone that wants to sell a house. So I'd almost say, rather than just acquiesce and say, you got it, I'm putting it in there, I would say, educate your seller at the disservice he's doing to themselves. And so I haven't actually had the experience to have to put that in the confidential. You tell me, because I haven't had to do it, and I don't want to do it wrong. So I'm gonna throw it right back to you.
Matt, do you have a comment on that?
No, you're right. Generally, you may have such a hot property, you got 15 offers the first day, and The only time I can think of a seller might say that is if you've told them to say that, quite frankly. But you may tell them to say that, because you may really truly think that you are wasting everyone's time because you know your seller won't budge off of a certain price. Maybe it isn't the worst thing to tell your seller that. That's your decision here as practitioners. I'm just telling you, a common misperception is submit all offers. And that's just a blanket statement that is just not correct.
And so is it appropriate then to say in the confidential comments, per the seller offers?
Years ago, I was it's interesting that came up. Years ago, I was the attorney for this association. And you know how funny how things change? Remember when we had the short sale addendum? Yeah. Remember that? We were having classes on that. We taught them together, Scott. We were up here in another panel. Short sales. It seems like centuries ago, and it was only about 10 years. And the question came up. It was an interesting question, and I didn't know the answer. I had to research it. Here was the question. There were bank REOs everywhere. That's what was selling. And one lender, a national lender, was saying the following: do not submit any offer unless you include an application to purchase the property with our bank. That was, remember that? Remember that, Terry? You just had that.
Certain lenders, certain person at the lender.
Yeah. So the question, and it was in the confidential remarks.
Yes.
Because that's what the bank REO seller required. And so they asked me, oh, legal mind, can they do that? I said, I don't know. So I went and asked some people smarter than me, did some research, and the decision was, well, yeah, they can do that. They may be stupid to do that, but they can do that. That's the parameter. They may be missing out on some great deals, some great buyers, some qualified buyers. But if they want to be stupid and say, only can you buy this if you apply. We're not saying you have to get a loan with us. You must attach an application. The resounding conclusion was yes. Not for us to decide if it's stupid or smart. But that's a perfect example of seller parameters. You just can't discriminate. Obviously, for the record, you know the list of things you can't discriminate against, the list of people you can't discriminate against. There, if that happens, you tell them, I cannot do that, I'm not losing my license, you're breaking about 100 laws, and then if they still won't do it, you resign and then you go report them to the government. So I'm just saying, short of that, yeah, you can do that. You can restrict. Again, maybe not the smartest thing to do, but that's what this lender did, and you said it just happened.
Yeah, does it need to be in the listing agreement then?
Yeah.
Everything. And that might be a great little moment that just isn't connected to anything, but just that I love to remind my agents all the time that our version of protected classes as realtors is elevated from federal protections per section 10 of our Code of Ethics, and we love that about being a realtor. So don't forget that too, that it doesn't just come down to fair housing, that realtors are bound by even a higher, more detailed level of protections. So just things to always remember.
I think you see it's already 10:30. I want to be very respectful of everybody's time. However, I do want to leave the opportunity open to anybody in the room who has any questions that they would like to pose to the panel. Yes?
Quick question for Scott. How long does an FHA appraisal stay with the property?
An FHA appraisal stays with the property technically 90 days.
Okay.
There's a misconception out there that it's 6 months, and it's technically 90 days.
Yes.
Question for Scott. For the delayed financing, are interest rates higher? Are there unfavorable terms for those loans?
So it's a cash out refinance. So cash out refinances might have a slight bump to rate. What is slight will determine on credit score and what the loan to value is. So you might pay 1/8% more on a 30-year fix, maybe 1/4% more. So there's a small adjustment, but it's usually $20-30 a month and not enough of a factor. When I talk to people and I say, look, if you put in a cash offer and you're saving, maybe you save $5,000, right? Because it's cash versus financed. How long are you going to have to spend an extra $18 a month before you equal that $5,000? So I have those break-even analyses conversations with people in those cases.
Yes.
To piggyback on that, 2 questions. VA loan, the appraisal, does that stay with the property just like the FHA
It does.
for about the same amount of time?
It does. I think VA is actually 6 months.
VA is actually
Yeah,
6 months.
I think so.
And on the code of ethics, like we were just talking about, as far as putting in the seller, I have one where the listing agent, she's in Tampa, and they put commission minus $300. And so I called and said, well, what is that? She said, oh, because our board here charges her $300. So I was like, can you do that? So would that be another one where if it's in the listing agreement, that they could do that?
Are you saying that they're offering X%?
Yeah, she's offering 2.5%, the commission
Right.
is 2.5%.
Right.
And in the confidential comment, she put, commission is 2.5% minus $300.
Yeah, you can do that, as long as it's in the listing agreement, sure. And that's an interesting point. What about this? Can you do this? Yes, to answer your question, you can do that. What about where you say gross 6%, I get 3.5 and you get 2.5? You can do that, yeah.
But as long as it's in the listing.
Yes, it's got to be in the listing agreement, yes.
A copy of the listing agreement or some proof from the broker.
They don't have to give that to you.
Oh, they don't?
Nope.
So how would you know if it?
You don't.
You don't. They don't have to give you a copy of the listing agreement. Does anybody think they do? They don't.
I do.
Yes, sir.
When's notice given? I got a grumpy seller, he wants his property reduced, and I tell him put it in writing, and I want to piggyback on what you said. He texts me and emails me, but he won't put it on a form, he won't sign anything. So have I got notice to do what he wants to do by text and email, or am I going down, being sued by one of the ambulance chasers?
Well, they advertise on TV all day, every day.
I see the big 4 every morning.
We were watching Jeopardy the other day, 5 different law firms advertised in one TV show at 7:30 at night, wasn't it? Anyway, to answer that question, that's a business decision you have to make. Are you comfortable with that? You have to be told by the seller. There's no law that says it has to be in the listing agreement. We say that for your safety. You absolutely should get it in writing. If you won't put it in the listing agreement, you have to make a business decision. Are you comfortable with that? At least you have something. I can't answer that for you. What do you think?
That's better. Having something is better than having nothing.
And having something in writing is vastly better than having
Right.
something verbal.
And I gotta follow up. There's a property on Del Prado, I go by it every day, it says broker protected. What's that mean? Do you guys have any idea? Because I actually called the guy because I'm interested in what the hell that means, so they never answer their phone, so I never get my answer. That guy drives me nuts every time I drive by there because it says broker protected.
It means it's for sale by owner, but he's willing to offer a commission. That's what broker protection means, essentially.
Okay.
That's their clue of saying, I don't want to list it, but it's an open listing, essentially. Whoever brings the buyer gets paid compensation, whatever's negotiated between the two of you.
Thank you.
Up front first, and then I still want my hand up in the back. Yes.
This is for Blake. So is there a set, you've mentioned something about amount of life left. Does the insurance companies automatically, arbitrarily say, and also a roof, that the roof is 16 years old, so they determine there's no life? Who determines the amount of life left on a roof?
Every carrier is going to have their own guidelines, so that's first and foremost there. But and some are at 10 right now, some are at 15, some are at 20. So it just really depends. But you could have a difference in rate in one that's like at 15, if it's over 15 years old, 2,000, 4,000. So there might be an economic interest in updating that, or whatnot. I would say. Wind mitigations you've heard that term, you know those are big. They're bigger now than ever because the wind portion, so you got 2 portions of the premium. You got the non-hurricane and the hurricane. And the hurricane is what's skyrocketing. It's not the fire losses and the water losses that are really the issue. So the hurricane portion is what's increasing. So all these wind credits are larger now. So updating roofs, things of that nature should be helpful. Shutters, sometimes you remember it only being like, oh, it's only $100, $200. Now it could be thousands depending on updating that nailing pattern. I know it sounds so silly, but sometimes that can be dramatic. It was $500 a few years ago. I'm just giving you general things. Now it's 1,500, depending on where it's at. So, yeah, a little bit more than your question, but yeah, I would say every carrier is a little bit different. So the more options you have, maybe you have a chance to place that. So it just really depends on the carrier. I would say stay around that 15-year mark on shingles to have, and then it changes about 25 on tile and metal, anything there. But Citizens has a little bit more grace on that, but, how much do you want to deal with a state-run entity?
And if I could just piggyback off that real briefly, there are companies out there, and I walk my buyers through this on a frequent basis, there are companies out there that will retrofit the third nail and whatnot after closing for $800, $1,000, something like that. And nowadays, you might write a check for $1,000 once and save $1,000 per year every year in your insurance. And going back to the affordability thing, in this market, these are the little details that lenders and real estate professionals should be doing to help make sure we're putting our consumers in the best possible position. No, it's not my job to lower people's insurance, but yes, it's nice to do because the average person buying a home in no way, shape, or form has that knowledge. So we need to make sure that we're knowledgeable, and we need to pass that knowledge on to people so they know, because that $1,000 a year insurance can easily be make or break for somebody.
Yeah, I could give you a quick indication on that real fast. So rates, somebody's rate increased 30% last year. They got another 30% rate this year. And the rate's actually around like 5,000, so somebody we were looking at. And they don't have the third nail or whatnot in the wind mitigation. And it would reduce it down to like 2,500. So it's almost in half. So it's substantial. And they just had that same policy, good company it's with, but yeah, and I wouldn't say that just go run out and get new wind mitigations or things of that nature, because sometimes you're getting all the max credits, but it's something to really look at now more than ever.
Yes.
Thank you. I have a question for Jennifer about with the new construction. So I receive, I request some models with the new prices, and I got surprised with in middle letters they said that the prices are subject to change with no permission. Then when I called back and I asked about how much could be, they can change the purchase price if they're in a contract, they couldn't answer that question. So how we can protect our buyers with a new construction? They're, dealing with the financial stuff, and then now they're in contract, and probably at the end they're gonna buy the house for how much?
So, for me, what I would do personally is I know that prices are changing crazy rapidly, and we had some builders in here speaking on that it has a lot to do with the availability of materials, the fact that material suppliers are now creating bidding wars for the contractors, which are then trickling down to our buyers. I might just go back to the terms of what's in the contract and deal with that right off the top in negotiations, and make sure that it's very clear that we're talking about if the price goes up, then it is due to changes to the quality of items or upgrades that the buyer is choosing. But see if you can negotiate a cap on the potential raise so that it's written into the purchase contract. That would be my advice as a broker, not as an attorney.
Yeah, they all have what I call weasel clauses. And those weasel clauses is, if we tell you our costs went up, we can pass that on to you. No cap. Try to negotiate a cap. Who here thinks you're going to get a cap?
Good luck.
Ain't going to happen.
Maybe a few years ago.
So get used to it. I'm seeing a lot of that. Even small builders. Here's the price, weasel clause, I can raise it, and they do.
And historically in the contracts, there were caps on those in the form of a percentage, and now many builders have removed it, and it's just, they could do whatever they want. And in defense of the builders, they're not necessarily just kind of pillaging their clients to make more money. They're literally covering legitimate cost increases that they're dealing with. I'm friends with some builders, and it is staggering the numbers that are the increases that they're dealing with. 80% increases, 200, 300% increases for certain materials. It's a problem.
Can I add to her point, because this is something we're seeing like crazy because of the housing shortages, folks looking to new construction, but understand you bringing your buyer there, you're being essentially paid a referral commission, and whatever percent that is great, but that is not a FAR contract, it's not a NABOR contract, it is between the buyer and the builder. Many of the contracts include, they can take up to 2 years to close. You're not even gonna get a closing date. So try to remove yourself from what we learned in these classes, and your buyer may be best advised to consult an attorney before getting involved in that, because that contract is out of our league, as I see.
And it's usually about 100 pages long.
I was gonna say that.
Yeah.
Written by high-priced New York and Chicago lawyers that are intentionally confusing, that are 1,000% rigged against you.
Yeah.
Yeah.
I'm not saying it's bad, but there's so many outs that we don't see, and they're gonna be looking to you to solve it, and we don't have anything to do with that category.
Outs for the builder,
Very
not
well
for the
put.
buyer.
Yes, good point.
And I think that's a good point. And I know we're up against almost 10:45. We were supposed to conclude at 10:30. Anybody who has to get on with business, please. The one quick question I have for both Ned and Ned on that category is, we all know that the FAR contract is pretty much buyer friendly. What are your thoughts on builder contract versus the FAR, where it appears from what you said, Ned, the FAR is more builder, is more buyer, and the builder contract, you pretty much said it, is really geared all in the builder's
The
favor.
builder contract's 100% slanted towards the builder. I mean, that's why, like, to use Ned's words, they're using the high-priced New York and Chicago lawyers to draft 100-plus page contracts. But unfortunately, we have to deal with what the market is providing right now.
Which brings me back to just educate your buyers. If
Yeah.
you want someone with new construction, don't guide them away from it by any means, but be very clear that you're not going to be able to advocate for them the same way that you would.
And be present to go over that contract. I've had a couple instances lately where the agent did not go over the contract. There was something ugly in the contract, as there are in all of them. It bit my buyers in the butt, and they were furious. I actually had an agent tell me not that long ago, that thing's 117 pages. What do you expect me to do? Read the whole thing? And I'm like, that's what I did.
But plus, they'll often demand bigger deposits than a standard seller will on the FAR. And good luck getting that deposit back. It ain't gonna happen.
Right.
It just ain't. I'm telling you, it's a completely different deal. Those builder deals, those builder contracts, it almost ought to require a separate real estate license to do those. If you folks want to do builder deals, get ready for a totally different experience.
It's like the Wild West.
It is.
Okay, yes.
Scott, what's the difference between the delayed financing and doing the refinance?
Because if you're pulling equity out of a home that you purchased on a regular refinance, there's a waiting period of 6 to 12 months. So to have somebody pay cash and then not be able to access their money for 6 months is a much tougher scenario than delayed financing, where there's no waiting period, where you could literally get the money back a few days later. I really think, for the people with the means to do so, I think delayed financing is absolutely one of the smartest ways to operate in this market if you have the funds. I've had a few people actually take loans out against their investment portfolios, which you could generally do, and pay cash that way. Their money's not out of the market, it's in the market, it's just frozen, they can't remove it. And then they use my loan proceeds to pay back that, what they call a margin loan, and they kind of, it's the best of both worlds because they don't lose any market movement at all. So not having a waiting period is the main difference.
Good. I want to thank everybody for their attendance today, and I especially want to thank our panelists. And lastly, our head of professional development in the back of the room, Angela Foster, for coordinating this. Panelists will be here for a little while. I know we have another session to start at 12 o'clock on inspections. Please feel free to pose any questions that you'd like to the panelists. Thank you very much, and please keep your eyes open for future training that's coming down.
Thank you.
Thank you.